Hello everybody, welcome to today's fundamentals. Hello Peter.
Hello.
So the Fed decided to downshift yesterday?
Yep, the Fed delivered a 50 basis points rate hike, which practically signals a slowdown from its last interest rate decision, which was of about 75 basis points. I would note that in the accompanying statement, the bank practically mentioned the rather tight employment market with robust job gains and rather low unemployment. At the same time, it also reaffirmed its commitment to bring inflation down to 2%. I would be noting also that the dot plot showed that Fed policymakers may be planning in the majority to raise interest rates up until 5 to 5.25%. Now, there is also a rather strong minority which tends to favor even higher rates. But for the time being, I think that we're going to be seeing interest rates just edging above 5%. Now, that was partially, at least, maybe higher than the market's expectations. But overall, the Fed's interest rate decision failed to be a market mover, both in the FX market as well as for US stock markets, as practically the Fed stuck to the script and was well within the market's expectations.
Mm-hmm. And what about US stock markets?
Well, US stock markets edged lower yesterday, but it was not a decisive movement which everybody was expecting. It wasn't a make or break event. So practically, I think that we saw already US stock markets having started to drop, the futures at least, in the Asian and European session today. And it's going to be interesting to see how the market will be opening again in the American session today.
Mm-hmm. And I understand that today we get the BOE's interest rate decision, correct?
Yep, the bank, BOE, Bank of England, is expected to hike rates by 50 basis points. Currently, GBP OIS implied probability of around 75% for such a rate hike, while the rest tend to imply that also a 75 basis points rate hike is possible. Now, we stick to the main base scenario of 50 basis points for the time being. And the next element which would be interesting would be practically the accompanying statement. Will the bank show hawkish intentions about the future or not? That's another big question. Mind you that a 50 basis points rate hike would be a slowdown from November's decision for 75 basis points. So practically it would be interesting also to see whether the bank will be signaling an even lower rate hike in the coming meeting.
Mm-hmm.
The vote count would be also interesting. We had the following development in the last meeting. We had the decision for 75 basis points rate hike, but we had two members which dissented. They dissented actually on not on the rate hike as such, but on the size of the rate hike. The one was favoring a 50 basis points rate hike, and the other was favoring a 25 basis points rate hike. So we have practically already some MPC policymakers which practically have started to see the possibility for a downshifting of BOE as well. And that may also have an effect on the accompanying statement. It may not be so hawkishly tilted as the last one.
Mm-hmm.
That should be it. Other than that, I would expect the pound to most probably get some support, but we may see the market reaction being moderated by the accompanying statement.
Mm-hmm. We are also getting ECB's interest rate decision later on.
Yep. We get ECB's interest rate decision. The bank is expected also to hike rates by 50 basis points. Euro OIS implied probability, lower probability, but still considerable, of 70% for such a scenario to materialize, while the rest, the other 30%, tend to imply that also a 75 basis points rate hike is possible. I would expect the bank to actually hike rates by 50 basis points. And I think that it's going to be interesting to see how the bank will be deploying also the terms for its quantitative tightening program, which is to begin. Should the bank show that it has some aggressiveness in the tightening of the quantitative program, that could probably provide some support for the euro, as Eurozone's economy would be hit by double whammy. On the one hand, it would be suffering a rate hike from the ECB. On the other hand, it would also be suffering quantitative tightening from the same bank. So it's going to be interesting to see what the terms and conditions will be about the quantitative tightening. The other element which will be interesting would be the accompanying statement. Is the bank going to be showing more decisiveness or more hesitancy? Should the bank be more hesitant, we may see the euro weakening. And last but not least, I would be highlighting ECB President Lagarde's press conference half an hour later, as in the past, she overturned market reaction a couple of times. So the press conference as such is a market mover by itself. And we may see it extending volatility for euro pairs throughout the duration of the press conference.
Mm-hmm. And what else is on the calendar for today?
Well, we have a number of releases. I would be noting from Canada the house starts. Now, the number is expected to drop, and that would be understandable given the tightening of BOC's interest rate decision and monetary policy tightening in the past. I would also be noting from the US the initial jobless claims figure. Should the figure rise, that would imply that the easing of the US employment market is ongoing. I would also be noting from the US the New York Manufacturing Index and the Philly Fed Business Index. Now, should the Philly Fed Business Index be on the rise, or at least it's already in the negatives, should it improve, we may see the USD getting some support. Last but not least, from the US, I would be noting also the retail sales growth rate. And should we see an acceleration, we may see the USD getting some support. Otherwise, should the rate slow down, we may see the US dollar weakening somewhat, as that would demand that the demand side of the US economy is slowly softening.
Mm-hmm. Any final comments?
Well, I would be getting back to the Fed's interest rate decision. There was an element which tended to pass under the radar. Now, the headlines in main media are that the bank downshifted. Yet the bank in its dot plot also showed that it's expected to continue to hike rates, maybe at an even slower pace, reach 5 to 5.25%, and the following year, 2024, start cutting rates. That would be one element. The second element, which was interesting, was about the next meetings and the bank's future intentions. The bank stated in the accompanying statement that it will take into account the economic outlook, one, and also the lagging effect of the cumulative monetary policy tightening up until now. So practically that would be another signal that it's about to slow down even further. I think that should be actually good news for your stock markets. It didn't seem to have a reaction. We're going to wait and see how the American Open is going to be and whether we're going to be seeing some increased volatility.
Mm-hmm. Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Welcome to the technical analysis part of the presentation. My name is Peter Yosef. I'm the senior market analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart, and practically all charts to be presented are to be of the same time frame unless otherwise stated. Now, the US dollar index seems to be on the rise over today's European session, yet seems to have stabilized over the past 45 minutes. It's interestingly enough, I have already corrected the 104.5 resistance line, which now has been turned into a support line, given that it has broken, the price action has broken above it, and rather clearly, I may add. Also, interestingly enough, is the RSI indicator, which has risen from the depths of around 26, and reached almost the reading of 50. It's currently at 47. So that tends to imply that the bearish effect seem to have been fading away. Let's correct also the labels so we get a clearer picture. Making a start with the S3 at 101.30, sorry. Second support line at 102.50. First support line at 104.5. Or that would be 104.05. And used to be a resistance line, given that the price action has just broken above it. We switch its role from a resistance line to a support line, moving to the resistance levels, making a start with the R1, which is now being placed at 105.55, and the R2, which is now being placed at 107.15, and finally the R3 level, which I have just selected. It's now being placed at 109.05, and it's practically resting. Let me correct that. There you go. It's practically resting on this trough here, which served the index well as a support line, and now it's turned into a resistance line, given that the price action is below it. So a little bit asymmetric, I know it, but I think it's pretty valid. I'm keeping it, especially the R2, which was tested twice, and the R1 tested here to the upside and as a support line here. The support levels are also seem to be pretty valid, with the S1 being here, S2 at 102.5, and S3 at 101.30. Now, the bearish outlook for the US dollar index, in our opinion, is still not over. And I'm basing that practically on this downward trend line. So it's going to be a question whether it's a mere correction higher, or whether there's actual bullish tendencies. For the time being, though, I'm treating this as a correction. And should the bears regain control, we may see the price action dropping, breaking the 104.05, and start aiming for the 102.50. Definitely a lower trough than this one would be expected. On the other hand, we have to note that the RSI indicator has risen, as we have mentioned before, which more or less tends to imply that the bearish effect is fading away. So for the time being, we may see the pair stabilizing somewhat, while a bullish outlook, despite not being probable, it's still possible, and in which case we may see the price action rising, breaking the downward trend line we have just drawn, break also the 105.55, and start aiming for higher grounds, possibly with the 107.15 being the next possible stop. Let's go now to Euro USD. in a similar but slightly different picture, you can see that the strengthening of the US dollar is present, yet not at the same intensity as in the US dollar index. It's a very small red candlestick. So for the time being, we tend to maintain the view for the sideways motion to continue, albeit we have to note here that there are some bullish tendencies which should not be neglected. Some are drawing a downward trend line, upward trend line, which starts from here. That would be the 4th of November. In our opinion, it's not like that. I expect this stabilization here to be mentioned, and I would start the upward trend line from here. It's not much of a different picture, but overall, I would note that practically, give me a sec, delete. So we have an upward movement which is characterized by an upward trend line, and that has started since the 30th of November, if I'm correct. Let's have a look. Yep. Should the bulls maintain control, we may see the upward trend line continue to guide the pair, if not push it even higher. The 1.0605 support line for the time being seems to be holding its ground and may allow for the pair to rise, break the 1.0785 and start aiming for higher grounds. On the flip side, should the pair stabilize, we may see the price action continuing to maintain a sideways motion just above the 1.0605. In the case of a bearish outlook, we may see the price action dropping, breaking the 1.0605, breaking also the upward trend line, and that would be a signal for a changing trend, and aim, if not breach, the 1.0460. It's going to be heavily dependent also on ECB's interest rate decision. Should the bank sound more hesitant and dovish, we may see the Euro USD dropping, while on the flip side, should the bank express a hawkishness, a substantial hawkishness, which could be reflected also in the terms and conditions of quantitative tightening, we may see the pair rising, aiming if not breaking the 1.0785. It's going to be an interesting pair. At this point, it should be useful to note that the RSI indicator has dropped from the highs of around 87 and is above the reading of 50. It's currently at 54, also implying that the bulls may be losing their grip on the past direction. Let's have a look now at GBP USD cable, which is currently testing the 1.2345. It has not clearly broken it yet. So we tend to maintain our bias for a sideways motion to continue, yet on the flip side, we have to note that the pair's price action also tested the upward trend line. And it's important. It's important because should the stabilization be maintained, that would imply practically that the upward trend line would be broken. It's actually testing it right now. And it would be interesting if we move to the minute chart, see more detail. You can see the test here. And it's taking another swing at it right now. Nevertheless, as long as the upward trend line remains intact, or if you prefer, holds its ground, we tend to maintain our bullish outlook. Yet should it be broken, that would force us initially to switch our outlook in favor of a sideways movement initially, which could be followed also by bearish movement should the pair drop even further. I'm sorry, I'm just reading. We have some. Thank you for very, very, very nice comments. Now, once again, it's going to be taking some attention at cable. And the main reason is that we have conflicting forces here. On the one hand, we have a bullish trend line, which tends to imply that the bullish movement or the pair could rise once again. On the flip side, though, we are seeing that the price action is constantly testing cable and could more or less be in a position right now to break and stabilize. Also note how the RSI indicator has dropped and is just above the reading of 50. It's currently at 52. So that would be another indication of a stabilization for the pair. It has reached a market which tends to remain rather indecisive on whether to actually proceed with the stabilization and jump higher or actually drop into the negatives. So I would be highlighting also BOE's interest rate decision, which is expected to play a key role regarding the pair's direction in the next 24 hours. Should BOE be tilting towards the bullish side, we may see the price action rising. For the time being, as mentioned in the fundamentals, definitely a 50 basis points rate hike is expected, but do not underestimate that substantial 30% majority, which tends to imply that more or less a 75 basis points rate hike is also possible. Other than that, should the bulls take over, next possible stop being the 1.2660. Should the bears take over, we would expect a clear break of the S1, a clear break of the upward trend line, and the price action to reach the 1.2125 and even breach it. It would be a prerequisite, in my opinion, for a bearish outlook, a lower true than this one. Anything else could be just a mere stabilization around the 1.2345. Let's have a look at USD/JPY. USD/JPY, reflecting the strengthening of the US dollar, was able to break above the 135.80. So we're going to be correcting this one, turning it into support line. Note it had provided support once again in the past here, in the recent past. And let's go hunting for a new ultimate resistance line. Now, I could go as high as this level. I would go even higher, in my opinion, and reach this peak here. I know it's a little bit out of sync, a little bit asymmetric, a little bit too high, but in our opinion, the peak here is a very, very validating point for the resistance forces at that level. Now, let's also color this in red. And ladies and gentlemen, we're talking about the 142.20 resistance line. Let's also widen the chart a little bit. Let's correct the labels. Okay. Now the S1, the S3 is now being placed at 131.80. The S2 is being placed at 133.90. The S1 at 135.80. And the R1 at 137.50. The R2 is being placed at 139.65 and the R3 at 142.20. In my opinion, the drop practically of the past few days and the consecutive rise during today's European session tends to underscore a sideways movement. It's a very wide one. It's between the 137.50 resistance line, which provides resistance here and here, while on the flip side, on the downside, the low boundary, I would be placing it on the 133.90, a level which practically provided support back here. So we can see this sideways movement here being characterized by the price action. For the time being, we note that the RSI indicator has broken above the reading of 50. It's currently at 57, sorry. That's not bad, but I think that the bullish sentiment is still lagging behind. I would like to see a clear break of the R1 before calling it a bullish outlook. For the time being, I tend to maintain in a sideways motion with the 135.80 being a mid-level here. Should the bulls actually take over once again, we would expect the price action to break the 137.50 and start aiming for 139.65. And that would allow us also to draw an upward trend line showing us the limitations of the upward movement. On the other hand, should a bearish outlook occur, for a bearish outlook we would require a break below the S1 135.80 and definitely a break below the 133.90. Anything between the 137.50 and the 133.90 is practically, for our opinion, a sideways movement for now. Now, some of you guys are suggesting that the S2 could be risen and could be placed at this level. I wouldn't say no. But for the time being, I'm seeing this true here as being more decisive. It was a beautiful downward motion which was halted at that level and reversed. Okay, let's have a look now at USD CHF. USD CHF, which also had an interest rate decision. Let's see the market reaction. S&P hiked by 50 basis points, as was expected. Definitely the 0.9390 now turns into resistance line. Let's go hunting for a new support line. Goes further back. Here we go. Okay, this level was tested, but it's far too close in my opinion. I would drive it lower on these peaks here. This, aimed for here, this. Seems to be pretty valid. And we have also throws. And the next level would be somewhere here. Let's color this in green. And it would be the 0.9010. With the next, the S4 being somewhere here. See these throws here? And this beautiful sideways movement here cannot be missed out. Of course, we're talking about June, so it's pretty far back. We're talking about 6 months plus. Anyways, let's readjust the chart. Let's correct the labels as well. Interestingly enough, despite SMB hiking rates by 50 basis points, CHF weakened. And we could have a look at it. Just give me a sec. Starting with the R3, which is now being placed at 0.96. The R2 being placed at 0.9450. The R1 being placed at 0.9330. The S1 being placed at 0.9210. The S2 being placed at 0.9090. And the S3 at 0.9010. To tell you the truth, I have more worry here that we may be too close to the S2. And I'm going for the final rate, which is somewhere here. Remember, we have chosen it before. Let's have a second look at that. One, two, three. I think this is more valid. We have nice touches here and here. That should be it. It's the 0.8940. Plugging this in, readjusting. Let's reposition also the labels. And let's have a look at the minute chart, because there we can observe with far more detail how the release, and here it is, you can see all this upward movement of USD CHF just ahead and at the time of the release. Actually, the release was at 10:30. This is 10:28, 10:29. The release is out 1 minute, 2 minutes following the release. Overall, we can see how USD CHF jumped around 150 pips plus. And I would dare to note that this is a clear weakening, of the CHF part of the pair, despite already having some bullish tendencies given that the US dollar was strengthening. But the overall effect is unconvincing. In our opinion, for the time being, we tend to maintain the bias for a sideways motion between the 0.9330 and the 0.9210, a level which was tested on the 14th, the day before yesterday, actually. So it's pretty valid in my opinion. It's fresh. It's good. Should the best take over for any given reason, say for example the US dollar starts weakening, we may see a reversal, a drop, breaking of the S1 0.9210. That would be a prerequisite. We would require lower true than this one. And in that case, we may see the price action heading for 0.9090. At this point, it would be interesting to note that the bears may be having it. There's a slight downward trend line having started to form. In our opinion, it's still a little bit too fresh. It may be not conclusive or as conclusive yet. For the time being, we note though that we have consecutive lower peaks and lower trows, which is a definition of a downward movement here. On the other hand, the 0.9210 seems to be providing some support. The price action has risen. It's also indicative how the RSI indicator has risen from the depths of 32 and is approaching the reading of 50. It's currently at 46. So that's another positive, which tends to imply a rather indecisive market and tends to suggest the notion of a sideways movement is to continue. Should the bulls take over, we may see the price action rising, breaking the downward trend line, breaking the 0.9330, and start aiming for 0.9450. I see that some of you guys are suggesting also an alternate. Yeah, it could be extended to the backwards. And in that case, should, say for example, start from here, that would imply something like this, or we could also start drawing it from here, which could be more representative. Yep. Yeah, I think this is it. So there are bearish tendencies, but they're fading away currently according to the RSI indicator. I would expect the stabilization to be maintained. Okay. Let's have a look at AUD/USD. Okay, that's interesting. Drilling out to the daily chart. Okay, this is out of the norm now. But we have a new upward trend line like this. Drilling to the forward chart. I think it's more conclusive. Note how we have consecutive higher peaks and higher troughs. Even this one, which has broken below the upward trend line. AUD/USD has dropped, has broken below the 0.6795. On the other hand, we note that the upward trend line is still holding. The RSI indicator, though, has dropped also below the reading of 50. It's currently at 41 and falling. And that tends to imply that the bears are slowly but steadily taking over, another indication of the strengthening of the US dollar. Should the price action break below the upward trend line, that would be a clear indication that the upward movement has been interrupted. And the price action may be heading towards the 0.6640 support line. Should the upward trend line be broken and the price action breaks also the S1 0.6640, that would be an indication for a bearish outlook. For the time being, though, I'm going to proceed with a correction, and the correction is going to be on the S1, which is going to be transferred a little bit higher. Note this true here and here, and to the upside here, here, here. These are beautiful touches, and I neglect this true here. So practically, we have shifted the S1 at 0.6670, 30 pips up. And for a bearish outlook, I would require the price action to break A, the upward trend line, B, the S1. I would require a lower show than this one for a bearish outlook. On the flip side, though, The fact that the upward trend line remains intact could imply that the price action is about to bounce on it, reverse back upwards, break once again higher than the R1, and start aiming for the R2. And that's a scenario which should not be neglected. In any case, definitely should the bulls maintain control, the next peak should be higher than this one. Okay, let's have a look at USD CAD. The USD CAD, which is struggling, literally struggling. Let's correct the labels. It's struggling with the 1.3570. It should be noted that there's a very tight sideways movement here, and the price action seems to be revolving around the 1.3570. It would be more characteristic. Let me drill into the 1 hour chart. You can see how it was testing this level constantly and keeping the price action in sideways motion just below it. It has currently broken just above it. So for the time being, I would be noting that actually this should be turned into resistance line, in our opinion. But let the price action drop just below it once again and we'll do that. For the time being though, we tend to maintain a bias for a sideways movement just below the 1.3570. Should the bulls take over, we may see the price action rising and reaching the 1.3685. Note how the level has provided resistance a number of times. Also back here and support here. And should that be broken, the next possible stop could be the 1.3805, a level which provided resistance back here. On the other hand, should the bears take over, the way is paved, literally, for the 1.3395 support level, a level which provides support very clearly here and here. Let's have a look at US stock markets as well. I would be choosing NASDAQ. High-tech NASDAQ, which is dropping currently. Substantially, I may add. It would be interesting to see what the market reaction was at the time of the release of the Fed's interest rate decision. Let's drill to the 1 minute chart and roll back. Here we go. Now this was at exactly 9 o'clock yesterday. Note how the price action dropped in the minute of the release at around 1,290 ticks, and it continued its drop practically up until Powell's press conference. This was signaling the start of Powell's press conference, and then it started slowly but steadily recovering the ground all the way through up until the end of it and a little bit afterwards. Afterwards it stabilized, and you can see how the effect of the release in Powell's press conference faded away. See how small the candlesticks become, only to start the Asian session, followed by the European up until now. Drilling out of the minute chart back to the 4 hour chart, readjusting it. So we have a downward movement currently of NASDAQ, and for the time being, I would expect the pair to stabilize somewhat, yet the RSI indicator below the 4-hour chart is currently at the reading of 40 and falling, so may imply that the bears are taking over, which may drive US stock markets, especially the Nasdaq, to break the 11,450 and start aiming for 10,970. I think we can observe a similar picture also for Dow Jones. Yeah. Definitely. So for the time being, I'm keeping my bias for a sideways motion for the Dow Jones between the 34,275 and the 33,470. I didn't see the make or break market reaction at the release of the Fed's interest rate decision yesterday. So it didn't substantially alter the index's direction. However, during today's European session, we can observe that there are some intense bearish tendencies. Note how the RSI indicator also has dropped below the reading of 50, which may imply that the bears have started to take over. By the way, it's a constant drop since the 12th of December, 13th to 12th of December, which may be more bearish than we expect and could drive the RSI down to the reading of 30, which in turn may push the price action lower, breaking the 33,470 and start aiming for 32,670. For the time being, once again, sideways motion expected between the S1 here and the R1. Oops, let's correct that. Okay, here it is. That should sum it up. From all of us here at IronFX, best wishes for solid trading.
Hello everyone, my name is Emily and welcome to another video. Today we're going to talk about automated trading systems. Automated trading systems, also referred to as algorithm trading, involves the use of an algorithm to execute trades according to the predetermined criteria. The systems allow traders to establish specific rules for both trade entries and exits. Once these are programmed, they can be automatically executed by a computer. The benefits of automated trading include more trading uptime, minimizing the impact of emotions during the trading process, and faster execution. To get started with automated trading systems, you need to decide whether you want to build your own system or use a third-party algorithm. If you build your own system, you can choose every aspect of the strategy and have a better understanding of how the system works. It could open and close trades based on timing or price using technical indicators to confirm your entry and exit points. For example, you could build a system to automatically buy 100 Netflix shares when its 50-day moving average goes above the 200-day average. Or you can automatically sell 100 Netflix shares if the market reaches volatility levels you are not happy with. If you are not confident enough to build your own system, you can use a third-party solution instead. This works in a similar way to a self-built system, opening and closing trades according to set criteria. However, you will have less control over the customization of these parameters. Whether you build your own automated system or use one which has been pre-built, it's important to backtest it thoroughly to make sure it works in the way you want before you put it to work on the live markets. MT4 is popular if you want a third-party solution because MT4 provides a marketplace where you can conveniently access pre-built algorithms to get started with automated trading. It's important to note, though, that automated trading systems have some downfalls that you should be aware of, like the possibility of mechanical failures. For instance, if an internet connection is lost, an order might not be sent to the market. Automated trading systems need to be monitored because of the potential for technology failures, such as connectivity issues, power losses, or computer crashes. Automated trading system can experience anomalies which could result in wrong orders, missing orders, or duplicate orders. If the system is monitored, then situations like this can be identified and resolved quickly. Thank you so much for watching us today, guys. Bye-bye.
Good afternoon. How is everyone doing today? Hey, Godson, how are you doing? If you can hear me okay, you can see me all right, put it into the chat, let me know. Just want to check and make sure that everything is working out properly. Hi, Kala. Yeah, me. Fantastic. Thanks for that, Godson. Hi, Wisdom. How you're doing today? Today, we are here with IronFX on a webinar series on the advanced fundamental analysis. So I hope you use some form of fundamental analysis with your trading. So this will be quite important. We'll give it a couple of minutes before we get started as everyone else streams in. And what I'd like to do as well is, as you are joining the session, put it into the chat. Let me know where you're joining me from. If you have any questions at any point in time, please feel free to put it into the chat. Let me know. Nigeria. How's it like in Nigeria this time of the year? Fantastic. Botswana. Places I haven't been to, but I would love to go visit someday. Nice. All right, we shall get started shortly. Just bear with me as we give it a minute more before we get going. Quite a number of things to get through today, so I'm quite, and I love looking at fundamentals. So it's really something that I would like to share with you all. Okay. All righty. Hang on. Let's get started. So again, welcome everyone to the IronFX webinar series. Today we are covering the advanced fundamental analysis, basically sharing with you how you could use some form of fundamental analysis together with your overall trading strategy. I do know that quite often when I mention fundamental analysis, a lot of traders kind of glaze over, they're not super interested. Why so is because most traders tend to like looking at the charts more. It's somewhat easier to just load up MT4 or load up a chart and look at the price movements and the candlesticks to try and determine where you should be entering or closing out your trade. But what I do like about fundamentals, and I'll try to convince you about fundamentals, is that it gives you the overall expected direction of where price could be heading, right? The overall expected direction of where price could be heading, just so that, if you're anticipating that price could be heading maybe towards the upside, or it could be going higher. And if the candlesticks and the charts are showing you that it's turning down, then I would, look to sit it out, wait for price to move in alignment with your fundamental analysis to help you get more confluence, right? You have more things. You don't just have the charts and the indicators or the price action showing you that price should be moving towards upside. You also have fundamentals telling you that it should be moving to an upside. Then, that way you get a lot more, a stronger move, possibly a more consistent move for your trade if you're looking to buy. All right. So that's how we would go about with fundamental analysis. That's how I use it as well. I'll tell you more about my trading strategy, but that's why I feel that, despite it being overlooked by a lot of traders, fundamental analysis is quite key to the overall trading, to any overall trading strategy. Okay. So before we get started, a quick disclaimer: the information in this webinar should not be considered as investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. What it means is that as much as I'll be sharing with you how to, adopt fundamental analysis, possibly deploy it into your trading strategy in the longer term, what you should be doing first as we go through this session, two main things to do is, if you have any questions at any point in time, please feel free to put it into the chat. Let me know straight away. I'm watching the chat so I can answer your questions immediately. Don't wait till the end. And then also after this session, don't go trying to analyze it straight away and trying to trade based on fundamental analysis straight away. What I always suggest is, after a session, review the information, test it out, back test it, get a feel of how price moves according to or in alignment with the fundamental analysis. And then after you're testing it out, back testing it, then you would forward test it on a demo account, or just placing expectations on the charts, right? So looking at news events, drawing a line, showing where you expect price to go, seeing how price moves in alignment with your analysis or against it. Then you start tweaking your analysis. You can ask more questions. You can reach out to me to find out more. And then once you gain that confidence and the understanding and the confidence, then you would deploy it together with your current trading strategy, right? So it's not really something to replace your current strategy. I always feel that, fundamental analysis or any new parts or parts and parcels of trading that you learn should add on to your current strategy rather than to replace it. Okay, so with that said, quite a number of things to get through. Understanding the economic calendar, right? First of it is understanding economic calendar, news events to watch out for. There's a whole bunch. There's a lot of news events to watch. Or there's a whole bunch of news events that gets released every day, right? But there are only a few to really watch and pay attention to. You don't want to over focus on news events, on every particular news events, because that could end up with you getting too much information or just sitting there waiting for every news event to happen. And then you might just end up not trading. Or we say paralysis by analysis, right? So too much information, not always a good thing. There are key news events to pay attention to, and then also understanding how these news events affect the market, whether you see price moving in alignment with based on the news events for the long term or short term, how long to expect price to continue on with the impact of the news, and then also looking at trading economic news events. I'll show you a couple of examples as well. All right. So far, so good. With that quick introduction of myself, my name is Jin Dao. You can all call me Jin. I have been trading for 10 to 15 years now already. The way I trade this is really up my alley, because the way I trade, I first look at fundamentals. I look at the news. I look at where what has happened recently, what is coming up, and then based on those two, I develop a bias towards the currency. Right, I'll be looking at the news and then determining, okay, this has happened, price should be going up or should be going down. Then looking at the news coming up, okay, if the news comes out this way, price would continue moving higher, or if it comes out the other way, we could see a big reversal towards the downside. So I use a combination of fundamentals first, and then after that, I'll apply the charts to it. All right, so I'll look at fundamentals, get the bias, but then I'll look at the charts to determine when to get into a trade. So I always say that fundamentals gives me the direction, charts give me the timing of when to get into a trade. And then based on the charts, I'll be looking at trend following scenarios. I do most of my trades as a trend following. I do use support resistance levels, some price action, some indicators as well. Okay, so first part, fundamental analysis. With that, let's look at understanding the economic calendar. Okay, there's a whole range of news to be released. Okay, I'll show you one more here first. Okay, so this is in August. We have yen monetary base numbers. We have the Aussie interest rate, or what they call the cash rate here. We have JOLTS job opening. That's the US jobs opening number, and also employment change numbers for New Zealand. So a whole bunch of news events, adding it all together. But what you want to know is that this is done on Forex Factory. You can look for it on Forex Factory, absolutely free to receive information. So I don't pay for any economic information. It's all free to join or free to get information here on Forex Factory. Let me just bring that up. Okay, so you can see it here on Forex Factory. Why is this news calendar or economic calendar so important? Is because it tells you exactly what time, right? It tells you exactly what time the news is happening. And that's very important, because before you enter a trade, or rather you don't want to enter a trade and then have a news event that's going to be released in the next couple of minutes. It looks like, it looks really bad, because if you enter a trade, a news event could change the direction of price. Okay, something could change and change the direction of price. So what we tend to do is look at the news events or look at the price and then see if there's any news events coming up. If there isn't, great, enter a trade. If there is, wait for the news event to happen, do analysis again, and then look at the charts to determine whether to buy or sell, if it's changed your bias or not. Okay, so the timing of your news release is really important, right? Pay attention to the timing, at what time it happens. I do also have the habit of keeping my own personal trading schedule based on the times, right? You can see that if I bring this up, let me see, how do I do that? Okay, this is Forex Factory here. If you bring this up and I scroll through to next week, or the week after actually, You see that on Monday, 26, we all know what's happening there. It's a bank holiday, it's Christmas period. When I see events or when I see non-events like that, I would tend to pay less attention to the markets, right? Take a break, pay less attention to the markets, just because I know that New Zealand, Australia, the Swiss, the Euro, the pound, the UK, the Canadians, the US, they're all on holiday. Liquidity in the market is going to be low. Volatility is going to be low. It's really no point checking the charts, watching it, trying to find a trade, because you know that pretty much everyone else around the world is not trading. So that's how I would plan my own trading day as well. You know, not just looking at the news events that could happen. I'm looking to see when there are no news events, when market is likely to be quiet with no significant price movements. Okay, so with that, coming back to the, where is it? Let me see. This one. Okay. That was the timing of the news. You can get it on Forex Factory. Let me put it into the chat here for you guys. All right. You can use that to get your news events. Good thing about using such an economic calendar as well is that you not only get the timing of the news, you also get the news event itself, the name of news events. You get the analysis. You see what was the previous data. You see what they expect, right? So the previous and the forecast. And then when the time comes around, the actual data gets released. So you can see here, it's not filled in because the time hasn't reached yet. It was 7:46. You will be waiting for the 8 a.m. news to happen. So the news events or the data for the news will get released as it happens down on the actual here. Okay, so you would be trading actual against the forecast against the previous, all right, AFP. So, you know, if you have your actual being greater than your forecast and previous, very good, strong number, you expect the currency to strengthen. If your actual is less than your forecast, then I would say you would be expecting price to weaken. Okay, so that one screen, this one screen here on Forex Factory showing you your news, super crucial and important. It tells you the timing. It tells you the news event itself. Okay, it tells you the previous, the forecasted, and the actual data to be released. All right, so this is the first screen or the first site that I have opened every day before I get started with my trades. So you can see here, we got a whole bunch of news, 10-year bonds on Japan, 10-year bonds, building approvals, monetary base, consumer climate, manufacturing PMI, jobs openings, GDT, price index, right? All that put together, it becomes quite confusing. All right, Kalayame, I saw your question. I'll get to that. Just let me get back to that. Okay, so it can get quite confusing. What you want to do is consider how all these news events come together, which ones are going to be more important. And that's where we have this slide here, right? Household events, household news. So this is a range of economic data. You have household news. What we get in household news are employment numbers, right? Employment numbers, consumer spending. We have the job numbers, we have consumer sentiment. All that retail sales data is household. Business would be the PMI numbers, purchasing managers index numbers. All right, and then banks will be the expectations of banks, how they expect prices to be or interest rates to be moving, the overall economic performance of the country. The government will be the GDP. Let me see if I can do this. No, I can't. Okay, so government will be GDP. So I'll show you here. This is PMI. This is GDP. Okay, and then central banks will be interest rates and also inflation. Okay, so you pay attention to interest rates and inflation data on the central banks. The government will pay attention to the GDP numbers. Business will be the PMI numbers to be released. PMI, we have services, we have manufacturing, right? We have services and manufacturing. Household, we have employment, we have spending as an overall. Okay, and what you see here is that there are a lot, based on the dots here, there are a lot of news information on household data, right? Consumer or employment numbers are released weekly for the US, weekly and monthly for the US. We have the consumer spending numbers on a weekly basis. We have a lot of data being released for households. For businesses, it's just one news event, the PMI, the services PMI, the manufacturing PMI. So you have a bit less, right? So you have a bit less information there. Banks, you're looking at the economic projection, right? So again, less info there. Government, even less so, it's just a couple. And then central banks, you have inflation, interest rates, decisions. Okay, so even less so again. Now, let me ask you that. With more news events here all the way down to the least news events, which do you think is going to be more important? The household data, is this going to be more important, or is the central bank data going to be more important? Based on, the number of news events being very high on a household and news events being very low in central bank, you got it. Great job. Good stuff, y'all. Right? So yes, central bank is going to be the most important, although there are less news events. They're more important. They have a bigger impact. They have a bigger impact on the overall economy. And also it applies, whatever changes here, whatever changes in this block applies all the way back down again. Right? If they're increasing interest rates, then we could see GDP drop. Right? If they're increasing interest rates, we could see consumer spending drop as well. So there are inflation numbers climbing high. We can see that PMI numbers or economic projection levels might be heading down. So there are bigger impact on central bank data compared to household. All right. So coming back to the timing of the news release and the economic calendar here, when we look at the AFP, so the question there was, about the AFP. What it is A being the actual data being released, F being the forecasted, and P being the previous. So if actual is greater than your forecast and greater than your previous, then you're likely to see price climbing towards the upside, right? How I look at this, or simple way that I would look at this, is that if, say, for example, last month you received $100, okay, and you expect to receive this month $110, but what you actually got was $150. In this case, your actual will be greater than your forecast and your previous. You'll be super happy, and sentiment will be pushing towards upside, hawkish, bullish sentiment, price moving higher. On the flip side, if you had your A being smaller than your F and smaller than your P, then naturally we would say that price will be heading down, because if we flip this around, you get 100, you're expecting 110, but you only got 99, right? Then you'll be negative, you'll be dovish, you see price pushing towards the downside. Now, let's say on the other last scenario, that if your actual is greater than your forecast, but smaller than your previous, what do you think was going to happen there? So just think about it. if you had $100, you're expecting 110, but you got a how does that work? That doesn't work. Let's say you got $150. You had 150. You're expecting 110, but you actually got 120. Right? So it's actual was greater than your forecast, but smaller than your previous. What do you think is going to happen here? Will the arrow be pointing towards upside, or will it be pointing towards the downside? What do you think? Upside or downside? Actual, greater than forecast, but less than previous. Good stuff, right? So you will still be looking at price possibly pushing higher. Why so is because you're already expecting 110, but you got more than you expected. Okay. But to preface that, or to put a little bit of a condition to that, it really depends on what happens before, what was happening before. If you always had been at 150 and then now you're at 120, then maybe it would only go up a little bit before turning back down again. So it also determines on what the previous trend was. Okay. Camila, does that answer your Kala Maye? Does that answer your question there about the AFP? Fantastic. Good stuff. All right. So there are also, right? So why a lot of people get confused about prices, they get confused about how things move, right? So just give me a second here. Okay. How prices move and which news to pay attention to. It's going to be quite important to pay attention to on the theme of the economic focus. Okay, it's important to pay attention to the theme of economic focus because it's not always the same news. It's not always the same news that you want to pay attention to. In different years, different times, there are different news to pay attention to. Okay, so you can't see it here. This is news events. I don't know why the color messed up. Okay, this is period. And this is the focus. Okay, so you're going to pay attention to different news events at different times. In 2008, 2009, we had a global financial crisis. 2008, 2009, we had a global financial crisis. At that point, banks were going bankrupt. We had a lot of people losing money. Big corporations were losing money. People were being fired, losing jobs. So the focus then was about employment data and wage growth, right? Employment data and wage growth. A lot of all the other news didn't have too much of a price impact during that period. Markets and traders, analysts will focus on how quickly will people getting back into work and whether they're getting paid the same amount or whether they're getting paid less than before. All right, so that's important there. And then most recently, we all know in 2020, 2021, we had the COVID pandemic. Right, we had a COVID pandemic. What happened at that time? We saw gross domestic product. This is GDP. All right, gross domestic product dropping significantly because as the pandemic was happening, economies were getting closed. Everything was shut down. No one was traveling. No one was spending. GDP dropped, right? GDP dropped significantly. The focus then during those 2 years was GDP going to turn back up? How quickly can it recover? Okay. And now most recently in 2020, it's all the worry about the recession. It's all the worry about the recession. Is it with inflation being sky high, with interest rates now slowly climbing back up, right? Are we heading into a recession? Not just the US, but globally, right? Because Pretty much all economies are facing sky-high inflation and increasing interest rates. We're seeing a slowdown in economic activity. All of that leads to the risk of a recession. So when it comes down to now in this period, the focus is down to recession, the worries of recession. All the news that I'm paying attention to is about inflation and interest rates. I'm not so concerned about the employment numbers anymore. I'm not so concerned about the GDP numbers. It's all about the inflation and the interest rates. All right. So that gives you a little bit of a snapshot view of the themes. It always changes. You can't just be looking at one set of news and expect to trade based on that or to apply it right across or your journey through your trading, right? Through your trading journey. It always changes based on the theme of the markets, based on what's happening in the world. So there are some key news events to pay attention to watch out for. In general, then you will filter it down as situations happen and develop. Okay. So like we were just talking about inflation data, right? Inflation data, it gets released as CPI. Just this week alone, we've got a whole bunch of CPI data being released, and we've seen huge price movements based on that CPI data, right? So you have core CPI. You have core terrible writing, pardon me. Core CPI, you have CPI month on month, and you'd have CPI quarter on quarter, and then finally CPI year on year. Okay, so you want to pay attention. Look at that. What do you think? Which is going to be more important, month on month, quarter on quarter, or year on year? Which is going to be more important CPI data to pay attention to? Which is going to move prices more significantly? Which CPI data? Year on year, you got it. You guys are fantastic, doing a great job, right? So the year-on-year data definitely would move prices more significantly. Why so? Because it considers a longer period, right? It considers a longer period. It's comparing last year's CPI at that point in time to this year's CPI at the same point in time. So that gives you a longer view, a general view of how inflation growth is going, right? The good thing is that quite often the year-on-year CPI data is being released at almost at the same time as the month-on-month data. Okay, so sometimes people tend to overlook the month-on-month just to focus on the year-on-year. What is the CPI? What's the CPI, the inflation data? Basically, inflation is the measure of change in price level of a basket of goods and services, right? A basket of goods and services. It indicates the change in the cost of living. The target CPI is at 2 to 3%. The target CPI is at 2 to 3%. I can tell you now that the US CPI is at 7.1%, right? The UK data, UK CPI, if I'm not wrong, let me just check that. You can see it just got released today, Wednesday 14th, 3 p.m. GMT +8 just got released at 10.7, right? 10.7 was a 11.1, expected 10.9, came out at 10.7. The US CPI just yesterday, where was it? Just give me a moment, I'll find it for you guys. US CPI, you can see here, just yesterday was 7.7, expected 7.3, was released at 7.1. Okay, so you can see the news events happening this week. So CPI data for the UK right now at 10.7. All right, and what you should notice quite quickly is that the US and the UK CPI is at 7.1 and 10.7 compared to their target of 2 to 3%. So it's multiples above the target level. It's multiples above the target level, which is why we're seeing the central banks increasing interest rates just to try and bring down CPI. So you see that as interest rates increases, typically we should see inflation drop, right? Typically we should see inflation drop. That's the relationship there. Is it researchers and analysts that released the expected results? Okay, so I'll come back to that. So I think what you're meaning is that well, it's not the expected result. Okay, so the results here are being released by the governments. So the 10.7 is being released by the Office of National Statistics. So from the UK government on 10.7. So the previous would be what they had last month or last period. The forecast is actually collated from a benchmark of analysts, researchers and analysts. They collect all their expectations, collect all their data, put it together, average it out, and then that's where you get the forecast number. Okay, so can you trust the forecast number? To some extent. You wouldn't say that they're always going to be right. And in fact, I can almost guarantee you that forecast numbers are most often wrong, but it's only how far off they are. All right, so at 11.1, in this case, how I looked at it this afternoon when I was trading, at 11.1, expected 10.9. So I would look at it as, hey, there's an expectation that inflation will slow down. Inflation growth will slow down, and it did slow down. It dropped to 10.7. So it didn't come as a big surprise in this case. I can see that it's slowly moving towards, very slowly moving towards its target of that 2 to 3%. Okay, makes sense. Hope I answered your question there, Godson. All right, fantastic. So with that, after inflation data, like I was just telling you here, as interest rates increase, we expect inflation to drop. So interest rates decisions comes from the central banks, right? Central banks release their interest rate decision whether to hike rates or to drop rates. We do have a big series of interest rates decision to be released tomorrow, right? Tomorrow. So there's going to be I believe there's going to be huge volatility in the markets for tomorrow. So watch out for that. Central banks hike interest rates to increase the cost of borrowing, right? So imagine now that US interest rates is at 4%. If they look at it, and they might be increasing it to 4.5%. Right now, if you're looking to buy anything suddenly and on a loan in terms of borrowing, then the repayments have gone up from 4% to 4.5%. So it increases the cost of borrowing. And because it increases the cost of borrowing, what happens is that people spend less, right? People spend less, or companies borrow less and spend less. It's better to put your money into the bank and receive a 4% return or 4.5% return compared to trying to trade and trying to make that 4 to 5% returns. So what happens is, as interest rate increases, it slows down on economic activity. It slows down on economic activity. And because of that slowdown, it also slows down the speed of inflation growth, right? It slows down the speed of inflation growth. And that's why it comes back to, as interest rates increases, we're going to see inflation drop. Okay, so right now, as we see inflation in the US 7.1, UK 10.7, still a distance away from the 2 to 3%, what we're going to expect in this case is further interest rate increases to come from the central banks, right? Further interest rate decision or interest rate hikes to come from the central bank. As we look, right, as we talk about here, a slowdown in economic activity. How do we know a slowdown in economic activity happens is when we look at the GDP data. When we look at the GDP data, because GDP measures the total value of goods and services produced in an economy, in a country, right? So, so when we look at, possible interest rates hike, right, slowing down economic activity, we see less people or less production, right? Less investments into machineries, less investments into technology, people saving money, spending less. That leads to a drop or slowdown in the GDP because goods and services, or rather goods, get slowed down. Goods production gets slowed down. And then overall economic activity of the country slows down. Okay. What do we mean by overall economic activity of the country? We could talk about employment numbers, right? Employment numbers would slow down because companies are not spending as much, they're not building as much, they're not selling as much. So they're going to slow down on employing people. And also spending would slow down, right? Spending would slow down because the less you work, the less money you have, the less you're going to spend. It's going to come down to spending only what you need, not so much on splurging. Okay, so consumer spending is going to drop as well. So that all puts together into a slowdown of the overall economic activity in the country. Make sense so far, everyone? I mean, we've gone through quite a number of points here. Make sense? All good? Okay, good. So how do these key news events affect the market? All right, how do these events affect the market? There, we will split it up in between short-term and long to medium-term effects. So what I mean by short-term effects is that it all depends on the existing trend or the pre-trend, right? Say, for example, employment change numbers, retail sales number, purchasing managers index. These will have short-term impact on price. What I mean by that is that, let's say, for example, price has been trending towards the downside. At this point, right? At this point, employment change numbers might be strong. We might see, an increase in employment numbers. What we could see, or what will most likely happen, is we'll see price push towards upside briefly because of the news, because of the good positive employment change number. But then because of the previous trend towards the downside, what we're more likely to see is that it will continue back down again. Similar to retail sales number, you can say push up, turn back down. PMI as well, it's going to push up before turning back down again. However, if let's say your pre-existing trend was towards the downside, and we have employment change numbers, in this case, not a good number, right? In fact, it's bad. Let's say it's a bad, more people are losing their jobs. What we're going to have is, as it drops, we're going to see that drop down, or not backwards. Let me just do that again. Right, we're going to see as price drops, we're going to see the news come out, bad news, we're going to see price drop downwards before continuing on again. Okay, so it all depends on how your not just the news, but also on the previous trend. Okay, so it's not just employment, retail, or PMI, but also the existing trend. With that said, it's actually more interesting, or you're going to see a bigger trading opportunity when you look at medium to longer term effects, right? Medium to longer term effects, which has the potential, this is very important, potential to change or reverse on trend, right? Change or reverse on trend. This, I'll give you the example of this later as a live chart. But in general, gross domestic product, inflation data, interest rate decision, what happens is that you could see price maybe climbing towards upside. And then let's say that they have decided to increase interest rates, and then we're going to see price drop back down. Okay, so we're going to see this could lead to a change or reverse in price. And this drop could happen over the medium to longer term. Okay, so more accurate depiction of this will be, oops. You see price moving to upside on release of the news, you're going to see price drop, right? And then after that, continue to trend downwards again. Okay, so it's all, these are the three main news events that could cause prices to change or reverse their trend. Okay, I want to show you this inflation data that we just had. So you see here yesterday, we had the US CPI data, 7.7, expected 7.3, came out at 7.1, right? 7.7, 7.3, 7.1. In this case, although it is a red number, which should signify bad news, it's actually relatively good, but just that as inflation drops, we're going to see possibly smaller scale interest rate increases for the US. Okay, so a little bit of weakness expected as that released on the US CPI data. We're expecting the US dollar to weaken. So with that, you can see here, right? I'll clear out these charts for now. You see here, this was the euro dollar, right? From the 1st of December, has been pushing towards the upside. We saw it trading higher because of that dollar weakness, right? We saw it pushing higher because of that dollar weakness. And then what happened at this point? This was when the news got released. You can see it was released at 9:30 p.m. GMT plus 8. And then it happened here at 9 p.m., right? Because of that dollar weakness, we actually saw the euro dollar go from this 1.0540, we could even say 1.0540 level, shooting upwards within the hour, right? Within the hour, oops. No. Within the hour, it actually went up by how much? That 121 pips, right? It went up by 121 pips within the hour just because of that data release being CPI weaker than expected, weaker than previous. So we're going to see that weaker US dollar, right? So that was the euro dollar pushing towards the upside because of the weaker dollar. You can see here as well, this is the dollar index. You can see that it was ranging right across. So this is how it can change a potential move, right? A direction. It was ranging right across. On release of the news, it broke lower from this 105 level straight down towards this 103.60 level, right? It went straight down towards 103.60, consolidated before testing the support level again. So quite important there. One more example I'll show you as well is the US yen. Let me just clear that out. This one you can see it's a complete reversal, right? So remember we were talking about how it's potential to change or to reverse trend. You can see here that put up. the US yen on the H1 time frame had been trading higher, right? We see let me just change this a little bit for you guys. Right, we can see that there was a low here, and then it's from a higher low. It's been pushing towards the upside on release of the news at this point, right? Because of that dollar weakness, we actually saw it turn down from this 137.30 level, broke strongly down to reach 134.70, well, 134.66. Bounced, retrace, and then possibly trading lower again. Okay, so this is really that snapshot view of how news could impact on your prices, could reverse trend based on which news you pay attention to. But bear in mind, it also depends on the previous trend, right? The previous trend. If you talk about big news events, it could reverse the previous trend. But what I also say is that if you're looking to test this out or to deploy this into your trading strategy, don't forget to also consider your support and resistance levels, right? Why we saw the US yen come down and test this level. We know we have a key support level there at 133.75. We know that there was also another level there, bit of a consolidation level there. I mean, a refraction level there. And that's why we saw the US yen drop to that support of 135 before consolidating, bouncing back up, and then now looking to trade lower again. Okay, so anticipation here is that we could see the US yen trade lower towards the downside, towards the 133.75 support level, because of that new downward trend, given the CPI data release. Okay. What I'll do next is also just to pre-warn you about what could be happening. You see here at 3 a.m. GMT +8. So I have a couple of new people who have just joined us. Just convert this to your timing. 3 a.m. GMT +8. We do have the US interest rate decision looking to go from a 4 to a 4.5%. So a rate hike expected for the US from 4 to a 4.5. Watch out for that. We could see the US dollar strengthen, right? Weaken first, and then after that strengthen or fluctuate around in high volatility. And then at 4:30, we do have the Swiss National Bank with the interest rate decision, 0.5 to a 1%. Again, another 50 basis point rate hike expected. 8 p.m. tomorrow, GMT +8, Bank of England for the UK expected to increase interest rates from 3 to 3.5. And then lastly, at 9:15, we're looking at the ECB, the European Central Bank, looking to take interest rates higher again from a 2% to a 2.5%, another 50 basis point rate hike. So you see that tomorrow, if you're looking to trade, tomorrow, just be super aware that there are a lot of big news events we're very likely to see price spike up, spike down, high volatility situations, because we have the euro with the big news, we have the pound with the big news, the Swiss franc with the big news, and most of all, the US dollar early tomorrow morning at 3 a.m. GMT +8 with the interest rate decision as well. Okay, so a lot of central bank news for tomorrow. We're going to see, might be, if you're comfortable scalping the market, there might be very good trading opportunities. But if you're not comfortable with it, then intraday opportunities, I think that if you're looking at longer term trades, you might want to size it down, so that you can move your stop loss a little bit further away, because I think volatility is going to be high. So you don't want to get fluctuated out of your trading position. Okay. So with that said, as we come to the end of the session, is there any further questions? If there are no further questions, also I would like to ask is, now that we've got the snapshot view of how fundamental analysis can add on to your trading strategy, would this be something that you'll be looking to, test it out and to deploy into your own trading? What's my general advice to beginners to FX? I would say start small, be quick to learn, but test it out, try it out. Don't give up. It's a long-term trade, it's long-term journey. So test it out. Find a strategy or have a strategy that fits to you, not a strategy that you think is going to work, because sometimes good strategies you might not like or might not use because you're not comfortable with it. So find a strategy that fits your own characteristics, your own trading characteristics. Don't give up. It's a long-term game. And lastly, make sure you manage your risk. Okay, I can tell you that in trading FX is not hard to make money, but if you don't manage your risk, it's going to be really hard to try and keep your money. Okay, so make sure risk management is number one, crucial to any beginner or intermediate or expert in FX trading. Don't you have a personal space where we can chat with us? You can reach out. I think that there is the chat room there. I think you ask IronFX about the chat room. You can find out more about joining the chat rooms. Alrighty. So with that said, hope you remember, please trade well, trade safe, big news events coming out. With that, take care now, and I'll see you again. Bye-bye now.
Today's session, we will look at swing trading. Swing trading is a style of trading that is used to capture short to medium term gains in a financial instrument over a period of a few days to several weeks. The strategy involves holding either a long or short position for more than one trading session, but usually not longer than several weeks or a couple of months. This style of trading is based on the assumption that market prices rarely move in a straight line and that traders can find opportunity in the minor fluctuations. Basically, swing trading involves identifying profitable times to enter trades based on two different types of swing lows and swing highs. A swing low refers to a major price low, while a swing high refers to a major price high. Forex swing traders generally use technical analysis indicators to determine which exchange rates are high or overbought and which rates are relatively low or oversold. Swing traders often follow trends, but they also look for market extremes to sell into highs or buy at lows when the prevailing trend's momentum is declining. They generally open positions with a time frame of a day or more, but they would generally hold a position open over a shorter time period than other trend-following traders. Thank you for watching.